Okay. This is the this is the area where I will be
Version.
I will be looking short. Kręcić. Teraz mi zielona.
Najlepsi.
Tak, proszę. I wanna wait a bit probably till London Open as we got bit of the direction of the night. It looks like it's a bullish. We need to remember that yesterday bullish move could be done because of the bonds of the auction. If people will start buying the bonds, it means the market will go lower because everybody preparing for the inflation. So patiently we need to wait. Really, I'm more keen to the sale today after what we saw last few days. Tomorrow maybe you'll have a bit of the bullish run. Oil done something amazing yesterday. I was trying to long it much too early, but after a huge drop in the morning, an hour before London session, US session open, they rebought everything what they lost in the last 2 days. And the overnight session was very still for oil. Okay, so continue to keep an eye on a positive climate, the need for a positive climate for that IPO. Bol.com, of course, the online retailer part of the business. Franz Muller, we appreciate your time this morning on the back of those results. CEO of Ahold Delhaize on the back of a margin beat in the second quarter for that business. Here's what else we're watching out for today then. At midday, we're going to get US mortgage applications. And then at 1 p.m., Mexico's CPI comes out. The emerging markets and how they're adjusting to inflation in focus. And Bloomberg Intelligence expects the number to decelerate for the sixth consecutive month. In the evening, we'll be watching the $38 billion US 10-year auction. The auction yesterday, of course, received relatively well, positively stateside. We'll watch the 10 Disney reporting earnings as well. So, of course, the global leader, or at least one of the global leaders in the entertainment business, that will be interesting to watch in terms of the earnings picture. Mark, when it comes to earnings, do you have to kind of update your view on kind of the margin story, the resilience in terms of pricing, which is different from one business there in terms of their ability to kind of adjust to this new inflation environment? I think the earnings story is set. If I was scalping, I would be scalping up to 1 minute WMA. Expectations for guidance so low. We beat those low expectations. Tech hasn't disappointed the high expectations. So the overall story is a tailwind. But on commodity, I should say, the 10-year auction, I'm a little bit more worried about. I know the 3-year went really well yesterday. Rather to be a bit more patient and cautious today. The 10-year has got a much lower yield. It is the kink in the kind of curve that we've got in the US. You get higher yields for the 2-year, higher yields for the 30-year. 10 years looking less appealing, and I'm not saying it's going to be anything dramatic, but I don't expect it to go as well as an auction as it went yesterday. Okay, so maybe today is more of a test than yesterday with that 10-year auction. Mark, thank you. You'll stay with us, of course, for the analysis across these markets. Coming up, we're going to look ahead to the market open, of course, after a surge. What a fascinating story in Novo Nordisk shares as the drug maker competing for the top spot on the stocks 600. It's not far off. Plus, Eon CEO Leonard Birnbaum joins us after the energy company credited stabilizing energy markets for its better than expected profits. And up next, Italy issuing a clarification on that surprise bank tax that sent lenders plummeting yesterday. we're going to bring you the details. And, of course, if you have any questions of your own for our guests, send them to us on IB Plus TV Go. You can also get, of course, more from the markets today. Team on the front page of the Bloomberg UK website by typing T Live Go on the terminal or checking out the website. Stay with us. This is Bloomberg.
Season is here.
Another crazy busy week. There's still a lot of uncertainty.
The market knows that there's bad things coming. Bloomberg breaks the numbers
A
first.
slew of earnings. Some breaking earnings. Lots of word from earnings, and a lot of them beat. Some of them slam.
With exclusive expert analysis.
This is a growth story. Advertisers are pulling back. It certainly will be a headwind.
Revenue growth across the globe. A record year.
Haven't seen a result like that since a decade.
Standing still. Bloomberg Television and Radio. The fastest numbers and analysis you trust.
Welcome back to markets. Today we are a little under 40 minutes away from the cash equities open. European futures pointing up by 0.9%. Let's get to some of the other top stories from the Bloomberg terminal that we are watching today. Bloomberg has learned that L'Occitane's controlling shareholder is in advanced talks on a potential deal to take the skincare company private at a valuation of around $6.5 billion. Billionaire chairman Reinhold Geiger has been discussing a possible offer for the shares he doesn't own at a 37% premium to Tuesday's closing price in Hong Kong. Geiger has lined up financing for the proposed bid and could announce a deal as soon as the coming days if he decides to move ahead. WeWork shares plunged in US late trade after the company said there's, quote, substantial doubt about its ability to continue operating. The co-working business cited sustained losses and cancelled memberships to its office spaces. WeWork says it will spend the next 12 months reducing rental costs, negotiating more favourable leases, and increasing revenue. Amazon is said to be in talks about joining other tech companies as an anchor investor in the IPO of chip designer ARM. The listing of the UK-based firm is expected to raise as much as $10 billion. A source says Amazon is one of about 10 tech companies in talks with Intel, Alphabet, and NVIDIA, also among potential investors. The SoftBank-backed company could list as soon as early next month. And Italy has issued a clarification of its new windfall tax on banks. It says the impact may be limited for some banks, and the levy won't exceed 0.1% of a firm's assets. For more on this, then, let's bring in Bloomberg's finance managing editor, Tom Metcalf. Tom, is this a U-turn? It's a bound turn, a clarification from the Italians? What do we know? What are the details about this windfall tax that caused such a sell-off across Italian banks yesterday?
Yeah, look, I think it feels like a U-turn. They're probably looking at the reaction. I'm sure there's been a lot of pushback from the industry as well. I think the interesting thing for me is, yes, it's a clarification, but there's still this big question of what kind of is the asset base this 0.1% will be on. So if it's global assets, that means about €1 billion hit for the Unicredits and Intesas of the world. If it's 0.1% of Italian assets, much smaller, sort of a few hundred million. So that's a really big sort of clarification that we're still waiting for.
Tom, good morning. Apart from clarifying whether it's global assets or domestic assets is equivalent to a minute ago, what is the next step in this process? What are we waiting for here on this story?
Yeah, look, I think the next step is, does this go through? Like we've seen this, for example, in Spain, that, the court case, basically their banks have sort of pushed back around this. So this still needs to be approved by Parliament. It seems like sort of a done thing, but very early days. Obviously, as soon as this announcement dropped, I think most of the Italian government turned out to be on holiday, so it's hard to sort of get much more clarification. But kind of, for me, the interesting thing is how does this pan out? Does it go through? And of course, the ultimate question is it sort of bigger impact than we thought it was yesterday?
Okay, so there's questions about this, the Italian banking sector, of course. We'll wait for more details. You and the team will continue to watch that. Meanwhile, in the US, some of the banks selling off yesterday on the back of this downgrade by Moody's. Some scratching their heads around this, saying that the timing is curious, given the turmoil in the banking sector in the US in March. Where do we stand in terms of?
I think a similar situation was on Monday.
Mid-size, mid-cap banks.
Yeah. You saw the shares fall off this report, and I agree, the timing, sort of feels slightly disconnected to almost the cycle of events. But what they're pointing out is these sort of
Sydney, Frankfurt below, London got the liquidity,
those banks get capped full, and just generally the whole sector.
and we're bringing down on New York. So I want to see what will happen
the details
today.
coming through, the changes coming through from the Italian government in terms of that windfall tax, and of course the sell-off that we saw across the US banking sector yesterday on the back of that downgrade from Moody's.
Till then, I'm taking any small scalps between 5 and 10 points.
Should we be about the banking sector at this stage?
Short term, not at all. Longer term, I do think that the turmoil in March will be through lending. I'm actually not worried about the banking sector. Maybe that's a big clarify. I'm worried about
What
lending.
time the sell of the pen starting?
But I'm not worried about major
Hold
banks being in the firing line.
and the US are at 6
In the
p.m.
very short term, though, I think
This will
Italian
bring
banks
some
will get
more
to the
to the
story as they were
market.
yesterday because they're waiting for clarification on that deal as Tom outlined.
Yeah, a little over 30 minutes from the open, of course. We'll check in on those Italian banks. We're going to focus on energy and E.ON in the next couple of minutes. Stay with us. This is Bloomberg.
look like it will be very slow morning, so I wanna see what the New York will bring to us. And the banks yesterday they screw us up a bit. Crude a little bit negative, NQ positive, yes, positive. X not open yet. Bitcoin drop a bit after yesterday. Nice run. YM RTY. Okay, it's more green. Dollar is giving back after the gains we've done in the last few days.
Welcome back to Markets Today. We are 30 minutes, a little over 30 minutes from the cash equities open. The top stories today. Italy says the impact from its surprise banks levy will be limited after the initial announcement, of course, sparked a broad sell-off of the nation's lenders. Asian equities are muted despite China sliding into deflation, while Treasury yields drop after a positive 3-year note auction. Plus, the troubles continue for Europe's renewable energy giant. Vestas warns of a challenging year with an ongoing turbine backlog dragging down full-year earnings, while Siemens Energy gets several downgrades.
Yeah, this was a dollar rally.
The auto parts supply
As we can see after the drop last week, we had a nice run up from Monday. This is when the market was crashing, and now we're coming back, kind of the support area range it was created.
The estimates were for 4.6 billion, so a little over the estimates in terms of the second quarter revenues for Continental. Adjusted EBITDA margin 4.8%, so that's below the estimates. So margins coming in lower than the estimates, which will be a disappointment, of course, for investors in that company. Again, we're going to be speaking to executives at Continental about the path ahead for that business, particularly with exposure to China coming up as well. Katja Dörfel is going to be speaking to us. So stay tuned for that interview. Meanwhile, we're going to check briefly on the futures before we get back to the earnings pitch. Of course, you had a slightly muted session on Wall Street yesterday. Stocks ending the day in the red. Lower banks were down on the back of that Moody's challenge in terms of the ratings downgrade for some of the banks. There was some upside coming through from some of the healthcare sectors, particularly the weight loss companies, and a decent picture in terms of the earnings for Eli Lilly. They also got a boost, of course, from the results of some of the weight loss companies or weight loss drugs and what that means for people suffering from heart disease as well. So that was a positive for the healthcare sector. Because banks, though, was a drag. Apple turning positive after 5 days of losses. The futures in Europe then pointed to gains. Italy coming out with a clarification around that surprise windfall tax that came through. So we're expecting to see a lift for Italian banks after the heavy selling of yesterday. FTSE 100 futures pointing to gains of 0.5%. Over in France, the CAC 40 looking to add about 63 points. And the DAX looking to gain about 108 points, gaining 0.7% as we lead up to our open, 27 minutes away, of course, on this Wednesday morning. Back to the earnings picture then, and with a particular focus on energy. E.ON is warning Europe has not fully turned the page on its energy crisis, with the market still at risk of spiking prices this winter. The German utility, which saw results beat estimates this morning, raised its 2023 earnings goal last month on market stabilization, but it's urging homes and businesses to continue to conserve gas and power. Joining us now is Leonard Birnbaum, CEO of E.ON. Leonard, good morning. Thank you for joining us. Give us the details then in terms of your current assessment of the state of the energy complex in Europe. How much of the challenge remains there?
Yeah, good morning, also from my side. Thanks for having me. Well, we have shown strong numbers in the first half year, and I would just say this is driven by the fact that we see indeed a little bit of less headwinds from the market and more tailwind when it comes to the energy transition. Now, the likelihood of a repetition of the crisis of last winter has gone down significantly, which also can be seen in the futures, in the forward markets. But we have to be clear that the structural change due to the Russian war against Ukraine and the drop out of Russian gas for supply of Europe is going to stay, and therefore the crisis is not over, and we have to do our part to make sure that we stabilize the situation as much as we can in Europe.
Good morning. Does that mean the government should still be supporting consumers with their energy bills?
I think you can't say that in general terms. That depends really on the markets. The share of wallet of energy is very different in different markets. For example, Eastern Europe versus Germany versus the UK. And therefore, I would say the answer depends where you are. There are certain markets where this is still necessary.
They try to invalidate more, so if the dollar will drop, it's as I prefer, will have a huge move up.
Over the next winter, but only as a precautionary measure. It's probably not really going to be needed anymore, but this assessment might be different in other markets, maybe like the UK or some other Eastern European markets especially.
And presumably that assessment, of course, is going to be tied to the pricing of energy. What are you modelling as you look towards the end of the year in terms of energy prices, gas prices in particular?
Now, first, we are not modeling when it comes to the very short-term horizon. There, we're just looking at forward markets, because obviously we don't have better models than the forward markets. Now, in the long-term outlook, we are modeling a structural increase of prices, because the Russian price of dollar gas is gone, going above that area, is structurally higher than in the past. I think this is what we're modeling in terms of this year. We're looking at the forward markets. We can see forward markets significantly down versus Q4 last year, but significantly up versus the pre-COVID, the last pre-COVID year, 2019. So there we have roughly a doubling to tripling of prices on the gas side, and that is a fact that is not going to go away anymore, I'm afraid, not in the short term.
Are you interested in potentially buying back some Uniper assets? I phrase it like that because obviously Uniper was a spin-off of E.ON. So are you interested in possibly buying off their assets as they come out of the bailout?
We are not going to speculate about M&A. I'm sorry, especially not in a live show, with I don't know how many viewers.
Many viewers would love a bit of that speculation. Because we let you off on this quote. Talk to us then about the build-out of the grids in Germany. Germany said this pretty ambitious goal of renewable energies making up about 80% of the energy complex there, but the grid rollout has been painfully slow. What is your depth of concern about that? Is it even feasible, this target?
I said we have less headwind from the market, and we have more tailwind from the energy transition. The energy transition for us mostly translates into an increased need for infrastructure. And indeed, we see that materializing. We still have many issues on the permitting side, etc. But we, as E.ON, have been really
The background is from the bonds, so the 2-year bonds.
So we see an
Look like
acceleration.
they're selling. This is where you got this small move.
Enough? The answer is clearly no.
And it
We are
was
not.
more
Still
consistent.
not fast enough in the expansion of the infrastructure. There, across Europe, by the way, we need to further improve, but that is for us especially relevant in Germany, because this is our largest market.
Okay, so you talked about how the kind of infrastructure is not being built quick enough, and I know you say you don't want to talk about M&A, but maybe a different type of M&A in terms that the German government's looking to buy 100% of the high voltage transition network tenant, and they're then looking to immediately offload a large chunk of that to domestic companies, including names like yourself would be that potential. Will you buy part of tenants in the German government, and will that facilitate this kind of expansion of the high voltage transition network?
Yeah, again, I'm not going to speculate about M&A. I'm sorry. Also not in this context. What I would say is in most European countries, the transmission system operator is actually state-owned. So for us, the combination of having a state-owned transition system operator and being the distribution system operator on the low voltage levels below the transmission grid is a normal picture. Now, I would hope that the German government investing into infrastructure is going to be a boost in the end. I think offloading and shares of that TSO system to private investors is a wise move. So maybe there's a benefit for that. Maybe that requires us to participate. Maybe not. So no speculation on that. It's too early to say, and the government hasn't really shown its hand yet. Also not to us.
Yeah, this is my scalp trade.
The UK government has come under fire for being seen to roll back on its net zero commitment.
They're hitting 5 points, then I've got a 10 point and 15, but nothing else than that.
It depends probably which.
As so far only first.
Um,
TP was always hit at second.
We
Was
are
only the two of them.
not in the infrastructure business in the UK, to be very clear. Whilst we have large network operations in Eastern Europe, in Scandinavia, in Germany, we don't have network operations, capital-intensive network operations in the UK. So this question is for us less relevant. I'm undecided, I would say, whether you're coming under pressure from an oil and gas perspective. I don't know what it means, what the UK government is really trying to achieve right now, because we're not in that field. From an energy infrastructure standpoint, the need is there. The question is the regulation going to be such that we can expect sufficient returns for the capital that we would deploy, for example, in heat transition? I think it's a so-so picture.
Okay, on the need for that infrastructure then, and Coy on the M&A picture. I just wonder if you have at least some appetite, Leonard. But we'll get back, get you back on for a kind of more detailed conversation about that at some point. We appreciate the time. Thank you for joining us on the back of those results. Leonard Birnbaum, CEO of E.ON, on the infrastructure needs both in Germany and maybe a little clarity in terms of the positioning of the UK government as well. Mark, I think that was an interesting conversation as we kind of weigh up the energy complex. We had a reminder today, of course, in terms of the inflation data, in fact, the deflation that's coming through from China. It wasn't that long ago, was it, that we were concerned about China being an inflationary factor in the global economy. What else is kind of catching your eye this morning, Mark?
It's very much Italian stocks. I think I was slow to kind of register.
Second TP done, 10 points.
Retracted or clarified by the Italian government about what this kind of windfall tax on Italian banks will actually mean. We're still lacking some clarity, but it did kind of draw my attention to Italian stocks. So this is a long-term chart of the benchmark index in Italy, and it's down almost 6% on the monthly cash terms. It's only the 9th day of the month, it's down almost 6%. Futures are saying we'll open a little higher today, but that's a pretty negative month. Now, it's been on a really good run recently, so this is the index going back over the last 17 years. But this is the best estimated P, so sorry, the Bloomberg estimated P ratio on 12-month blended forward basis. And you can see it's near basically the lows of the entire history. The only reason, in fact, we go back to 2006 is not particularly data mining period. We actually only have this best P estimate going back those 17 years. And in that 17 years period, this is pretty much near the bottom of the range. So then there's two things. I think one is now the government is slightly rode back in some of the comments. I think that Italian stocks can bounce today. But I think ultimately, even though they're at the highest level since basically the GFC, they're still way below those GFC peaks. And I think there is potentially much more upside in Italian stocks unless you believe the global economy is going to a major recession over this year. And I think on a valuation basis, it is in Italy, it is in markets like it's in Europe, it's in markets like Italy, where there's real upside over the next year if you're optimistic in global stock markets, not in expensive markets like the US or India.
Okay, Mark, there, an evaluation call then, broadly, for Italian stocks, of course, as we weigh up the changes around the tax implications for the banks. Really interesting. I just want to reheat another story from yesterday because I think it's so important. Country Garden, of course, it used to be the largest developer in China, and Goldman Sachs have been crunching the numbers in terms of the potential ramifications for the broader sector, just pointing out the backlog, the inventory that these developers had to work through, the fact that you could be selling as few as 11 million units in China. That's down, by the way, from about 18 million units on an annual basis in 2017. All of this requires major restructuring. A big bang is the call from Goldman Sachs to restructure the real estate market in China. They just say that policymakers are not ready for that. That is not where policymakers are in Beijing right now. So they see a long-term drag as a result of what is happening in the real estate market in China. Of course, in response to
Yeah, we got a 15 minutes from market in London to open.
yesterday, all of this could shoulder creditors with as much as $260 billion worth of losses, and the bulk of that is going to land on banks. This is a really important story, and again, Goldman Sachs crunching the numbers. And this is just one I wanted to flag, along with, of course, Mark and the spotlight on Italian equities. Now, coming up, we're going to look at the stocks to watch at the open, including Vestas Wind Systems. Real disappointment there. The Danish company warns of increased costs coming from a backlog of wind turbine orders, and that will drag down full year earnings. Supply chain constraints once again a problem, and margins being squeezed. Stay with us. This is Green Friday. Wednesday. Welcome back to Markets Today. We are about 13 minutes away from the cash equities open. Futures running solidly up by a little over 1% of recouping, looking to recoup some of the losses of yesterday, with particular focus again on Italian bank stocks. Let's check in now on what you need to know then heading into the open. Sam Unster joining us from our Markets Today blog. Sam, there's a fascinating story about the travails of WeWork.
Yeah, I mean, that's a really nice way to put it, the travails of WeWork. I can remember back in 2019 when they tried to IPO initially and spending, I think, at least one whole afternoon and then a few days afterwards reading their
I mean, that
prospectus.
prospectus was quite something, wasn't
It was a disaster. They then tried to kind of fix the business. That didn't really work because of the pandemic. That really got in the way of them kind of cutting costs, cutting their rental costs. And obviously they lost a lot of revenue over the course of that time. And now they've come back with interest rates rising and a property market that's struggling, and overall it seems to
I
be.
mean, bottom line is, this is a business that could collapse.
Yeah, it is. It is, and then certainly, like, they now face a significant period of trying to really shore everything up. I think the likelihood is you'll see some closures of some WeWorks across the world. They're trying to cut costs, rentals. They'll be going in with all of their landlords very, very hard to try and cut costs wherever they can. It's going to be a difficult 12 months.
And there's a theme emerging away from WeWork around anti-woke and the pushback there. We're seeing this from Ron DeSantis, of course, who's trying to challenge Trump for the Republican nomination stateside. But it's also percolating through the body politic of the UK.
Yeah, it's so this sort of began with Nigel Farage and Coots and this sort of debanking scandal. And what you're now seeing is that this is actually having substantial impact. So the NatWest CEO lost her job. We've seen AB InBev, with their Bud Light campaign, they have seen sales dip because of this campaign that they did with an influencer, Dylan Mulvaney. So, there are real, genuine impacts for these businesses now over these kind of anti-woke campaigns. So it's something that now brands have to navigate, along with everything else they have to navigate in the current economic environment.
Okay, Sam Unster from our Markets Today blog with some of the individual and interesting, quirky stories we are focused on the anti-woke pushback, something that is pretty fascinating when it comes to the corporate and UK PLSC, and of course the potential downsizing again of WeWork. You can get more, of course, from the team on the front page of the Bloomberg UK website, or by typing TIGO onto the terminal. A couple of stocks to watch then in focus for us today. Joe Easton from our equities team. And Joe, you're looking at the auto sector for us this morning, as well as wind turbines.
Morning, Tom. So we've got a close eye on autos today. Two bits of news here. First of all, Continental. Now, they have actually improved their sales guidance slightly. The sales might not fall as much as expected, but in terms of the earnings, that is actually weaker than expected due to weakness in the tyre market in Europe and North America as well. And their margins looking pretty weak once again. Now, the separate bit of news is there's a big note out from Citi. They downgrade ratings on 4 car makers, including Porsche, Mercedes, and Stellantis. Just got to make sure I can read my own handwriting there. They do upgrade VW and Renault, which they say are too cheap to ignore now. They're getting more negative on the sector. They say that consumers will start to cut back on monthly funding in terms of what they're willing to buy on finance in terms of new cars. Brought those two stocks, Continental and BMW, one of the buy-rated stocks on the screen there. We had a bit of a warning from BMW just a few days ago, so there's a lot of info to digest in that sector today.
Joe, good morning. Tom broke the Vestas earnings at the top of the hour. You seem pretty disappointed. What's your take?
So Vestas, the cost is the big thing here, Mark. The cost jumping around 3.8 billion euros for their full-year guidance. Their sales pretty mixed, potentially a slight improvement on the guidance there. But this all comes down to some defects in some of their wind propeller blades, something that they flagged before. They haven't spent a lot more money on that, trying to fix that issue. And that's something we also saw from Siemens Energy just a few days ago. Brought these two stocks up on the screen. See that massive drop in Siemens Energy, that also weighed on Vestas. So perhaps a bit of this priced in, but it does look like a big increase on costs, which could weigh on Vestas this morning.
Joe, meanwhile, it looks like there's a healthy beat coming through for ICAP. What are the details there?
So TP ICAP, as you say, beating expectations in terms of revenue. However, some of the global broking, so this is the biggest interdealer broking, and some of their revenue in that division is actually down slightly due to weakness in the rates market, which benefits from the volatility. Now, volatility has come down a lot recently. We can see that on the chart here in terms of the VIX index and also TPI cap share price as well, kind of tracks that lower. An interesting point to note though, in terms of broker revenue per head, they're now making around £380,000 per broker. That's up around 10%. So they've reduced the headcount in terms of brokers, but the brokers
down on
individually
15
making more money,
points.
having a bit of a happy time over at TPI.
All right, that's a
And
positive
really
dynamic for those
eyeing
members
up
of the team there at TP ICAP on the back of those positive results.
confidence about
Our
the
equities reporter Joe Easton on some of the stocks to watch. Joe will be back with us in the next 10-15 minutes to get an update on how those stocks have traded at the open. Mark, just a few minutes ago, of course, until Wednesday's open, we are discussing, we're looking at the data, of course, once again. We talked about the trade data out of China yesterday.
Order filled.
Dynamics today. Australia often, of course, the gauge in terms of the reaction function
I've
from
got
the data
short
coming
open
out of China.
oil as
But maybe
well.
not so much today when it comes to Aussie dollar. How is it playing through that important commodities provider to the Chinese market?
Yeah, I think it's really interesting. The Aussie dollar has continued to strengthen during the session and has been really beaten down the last couple of weeks. But Aussie dollar is going to be a high beta play on the China story. As you mentioned, it's where China gets many of its exports, and it's really kind of very linked to the Chinese economy. And I think the fact that Aussie dollar is bouncing is kind of showing that the China story is so negative, but it's hard for assets to keep playing it negatively because it's already been repriced. And the deflation story, we knew that was coming. That's really a non-story. It's the country garden headlines that are very worrying. This is a major, major story, and we had just at the top of the show that kind of story breaking from Bloomberg Intelligence saying this could be a bigger bankruptcy problem than Evergrande, and like it's really, really big issues. Country garden story. So it's hard to see anything positive out of China, but assets have already traded that negative story. It doesn't mean you're too bullish, but you're way too late to get excited on the bearish side now.
Yeah, and policymakers, the argument then from some, the likes of Goldman Sachs, is that when it comes to real estate in China, policymakers too little, too late. We remember how much time and attention we focus on Evergrande. It is now Country Garden, as you say, that is in the spotlight. We continue to follow developments of that business. Mark, thank you, of course, for walking through the key market themes and the analysis from Mark Cudmore, of course, this hour. Stay with us, what is next? This is football. We've got under 2 minutes to go until the start of cash equity trading. Welcome back to Markets Today. I'm Tom McKenzie in London. Your top stories today. Italy says the impact from its surprise banks levy will be limited after the initial announcement sparked a broad sell-off of the nation's lenders. Asian equities got muted despite China sliding into deflation, while Treasury yields drop after a positive 3-year note auction. Plus, the troubles continue for Europe's renewable energy giants. Vestas warning of a challenging year with an ongoing turbine backlog dragging down full-year earnings, while Siemens Energy gets several downgrades. Let's check in on these markets then after a down day across US and European stocks. Yesterday, it's US banks that led those losses. There's a little bit of upside coming through for healthcare. The data out of China again in terms of the deflationary impact that is weighing on some of the commodities complex, including oil. Futures in the US points gains 0.2%. The Bloomberg Dollar Index is a little softer after the gains of yesterday. Of course, that risk-off tilt that we saw unwinding to some extent, currently down 0.2%. The take is in focus for us today because we're looking ahead to an auction that Mark Hobble from our online team says is far more consequential than the auction of yesterday in terms of the appetite to soak up those treasuries. The benchmark in focus just above that 4% level. $86 a barrel on Brent, just down a little under 0.2%. And again, you can tie that to the softness in terms of the import demand and the deflationary picture out of China. We'll check in, of course, in terms of the European futures looking healthier as Italy, the government there looks to, is it a U-turn? Certainly a clarification when it comes to that surprise windfall tax. European futures points and gains of a little over 1%.
Okay, I'm
That's
short.
131 points. UK, you're looking at gains of 45 points, up 0.6%. Over in France, 7,363 is the picture. The markets are opening, and let's let the pricing action just percolate through these markets. The FTSE 100 currently up about 0.1%. The earnings picture, of course,
Very
continuing
small
to
stop
round out the
loss.
story for
First
us.
one is
Looking
a
at picture, yes,
5 points,
turbines,
second one is a
renewable energy,
7
that remains a
points.
concern. Supply chain constraints and margin pressure coming through for Vestas. But you did have some beats coming through for the likes of ICAP. ICAP, the brokerage, of course, shows who's pointing out well. The Spanish IBEX now up 0.9%, gaining 1%, I should say, in terms of the upside coming through.
Very
Especially
sticky,
the
I've
banking
got up
sector is Spain as well. The ripple effects of that decision
97.
policy announcement out of Italy impacting Italian
And
Spanish
I
banks
shouldn't
yesterday.
move
But
that
you are
because it
recouping some of
down
those losses, at least for the first few seconds
well,
of the trading session today. Over in France, gains of 1.2%. Here in the UK, the FTSE 100 adding 45 points, up 0.6%, holding above that 7,500 level. Let's flip it over and look at sectors then. Banks, certainly in focus, basis of resources, energy as well. We were speaking to the CEO of E.ON, who was talking about the changes in the energy complex. Businesses, households still need to be cautious as we lead into the winter, with the line there from the CEO of E.ON. Basic resources currently up 1.5%, 1.4%. Energy gaining 113 points as a sector, up 1%. Travel and leisure is in the red, down 0.4%. And we're looking for banks. There's the gain there then, 1.4%. Again, as Italian government ministers modify their messaging.
okay, very choppy
More
lead.
details from Sam Hamstead and team just in the next few minutes. Auto's also gaining 0.6%. Broadly, you're positive across the session midweek
I'll
on
just
Wednesday.
take this
With a
cups for
focus
now.
on the reversal, it seems, in banks. Sam Hamstead, let's get the details then from our markets today blog. So not a big surprise, I guess, in terms of recouping some of the losses. We had expected that, given the changes in the language from Italy. But we haven't more details in terms of the material impact of this windfall tax on Italian banks and how much they just brought this back.
I think I don't know if I need to say it's been brought back in enormous. I think yesterday's comments were quite off the cuff, and I think that really hit the market. I think probably a little bit harder than they initially had anticipated. I think those comments have now been softened a little bit. I think you'll see Italian banks move up today. It'll also help just the sentiment with banks generally. You saw actually Spanish banks took a little bit of a hit yesterday too. Those are likely to rise again today. I think what you see here though is just this consistent concern for banks in particular that we talked about a few moments ago, actually the UK banks, about political risk, and for Italian banks in particular, where they have been particularly leveraged to rates, so they have made huge profits from rates going up. I think they are still at risk of seeing more.
This is the area to short it.
Okay, Unicredit is gaining a little over 3%, 3.3% on the back of that
but
news,
I
then, as you
don't
say.
like
We're going to be speaking to Octavio Morenzi, a banks analyst, later in the show, who says, to your point, this underscores the concern that, well, if banks are in focus as a potential windfall, what about energy companies? What about the defence complex? And the list goes on, the risks then and the concern in terms of
Okay, I'm in short.
that with Octavio. Meanwhile, China data is in focus again for us today as we look at the inflation impact here in US and Europe, and the question is how far and how fast that inflation picture has come down. China is in deflation.
Yeah, and I think they broadly expected, and really this is another, we had the trade data yesterday that was very poor. Another pretty weak report out of China that mostly appears to have already been priced in.
I split
I
it
think
for
the question,
40
and actually alluded
piece.
to this a little bit earlier, is what's the government going to do? Does this deflationary report, does this push them to do something? You're seeing the issues in the property sector there. It's getting sharper and sharper, so now it sort of moves away from the data and back onto authority.
Back onto that policy response. Robin Shin at Morgan Stanley said that is exactly where the focus is, that need now for the government to respond. Deflation is the story in China, if not elsewhere. Sam Munster, thank you very much indeed. Sam Munster, of course, from our Markets Today blog. Thank you. You can get more, of course, from the team, Sam and the team, on the front page of the Bloomberg UK website. Really do check it out, or by typing TIGO on the terminal. Let's get a check on some of the individual stocks on the move. It's an interesting day, despite where we are in terms of the summer season, Joe. What is in focus for you? What's moving? What is jumping at the open?
So TPI cap is the one I can see really jumping at the moment. So I'm up 11%. They are reporting that their individual brokers have made more money than expected in the last quarter and also the half year as well. That's one of the best performing stocks on the London market, up 11% at the moment. ABN AMRO, a bit mixed. There wasn't as much of an upgrade to the net interest guidance as some had hoped, but the buybacks are also in focus, and that looks pretty strong in terms of the Dutch lender. One of the last firms to report from that sector during this earnings season, but that one just turning negative, as we can see. You mentioned UniCredit, the Italian bank fell around 7% yesterday following that tax news, coming back up a bit given the latest update that some of those taxes won't affect more than a small percentage of the assets according to the Italian government overnight. Flutter, meanwhile, the owner of Paddy Power, that one looks strong in the UK, but there's some weakness over in Australia. The Aussie's not gambling enough according to Flutter, listed over in Dublin, that one down 3% this morning. Then we're going to flip over and review a couple of other earnings stories. So we have Vestas, of course. Now Vestas, very weak, but pretty much priced in, given we've had warnings from them and Siemens Energy. Siemens Energy also downgraded over at JP Morgan, but Vestas really coming back up, gaining after falling so much over the past couple of years. Delivery Hero, everyone's still splashing out on takeaways on Saturdays, and that one is up 6% over in Amsterdam. That was expected to be a bit weak, given the pandemic is easing, but we're not seeing signs of that. Delivery Hero, a big jumper there. L'Oreal, meanwhile, this is a read across from L'Occitane Provence. I'm sure I'm not pronouncing that correctly, but that company is being potentially taken private by its owner. That's the big pharma and also luxury goods company that's listed in Hong Kong, so skincare, that kind of thing. That's a bit of a read across there, up 1%. Novo Nordics, that one went to up.
Come on, you.
I was having my mid-afternoon nap, and that news broke up 17% yesterday. It's still gaining. I thought that one would come down a bit, given it rose so much yesterday. On track to become Europe's biggest company by market cap, and still going up around 0.8%. A pretty decent move for the size of that company after that shock obesity data news that we got, as I say.
So far, it looks like it's same as
Finally, we're going to
Monday.
have a look at some of the autos that we mentioned in stocks to watch. Continental, it was weak to
I'll
sell
let the drop
before
to
the market
continue.
before, but again,
Then when the bonds start buying,
gaining almost 2%, pretty good return given the negativity
it
that was
will
in that
crash
space
even
today.
more.
And then we brought up those stocks that Citi had in their note. Now BMW gets a sell
The other
rating
idea
over
is the
Citi.
market
We
will
can
run
see that
higher
just
till the
turning
bonds,
into the red light magic. That was great timing. So that one is down
till
there
the
to
auction
sell
start
over
on
at
the
Citi,
US
but
bonds, which is
Volkswagen
6 p.m.
and Renault, they get buy ratings and they
So
are
let's see
gaining
the
up more than
confirmation
1%.
direction.
Renault nearly 2% over
Now
in
I
Paris.
spread my
Bit of a turning back green
TP's
again.
bit
A
more
nice
from
picture on
the.
the auto sector today.
Oh, very nice indeed. Thank you very much. Speaking
It's not scalped anymore. I took only I opened 10 contracts, 4 of them was after 5 points, another point is at 7 points, and then I'll have 2 runners.
In the session this Wednesday. Here's what else we are watching out for today. At midday, looking at US mortgage applications. To what extent is that starting to dry up the application process for mortgages in light of higher rates in the US? That's going to be an interesting gauge. And at 1 p.m., we're going to get Mexico CPI, inflation prints out of an important emerging market, of course. Bloomberg Intelligence does expect the number to decelerate for the 6th consecutive month. So inflation coming down substantially, at least in Mexico. In the evening, we'll be watching the $38 billion US 10-year auction. The 3-year was well received. The 10-year, that may be slightly trickier for the US Treasury.
Too much trouble.
We'll watch that. Finally, later in the day, Disney reporting earnings, of course, a gauge in terms of the movie's money business and, of course, their resorts as well, in terms of how much is filtering through and the streaming service. For Disney, that's an interesting earnings picture to watch. Coming up from the Italian banks shop to a weight loss, drug-driven share frenzy. European equities, well, they're drumming up compelling narratives this week. Anything but dull, that is for sure. We're going to dig deeper into that next. Stay with us. This is Bloomberg.
Another crazy busy week for the uncertain.
The market knows that there's bad things coming.
Bloomberg breaks the numbers first.
Slew of earnings. Some breaking earnings. Word from earnings. A lot of them beat. Some of them got slammed.
With exclusive expert analysis.
This is a growth story. Advertisers are pulling back. It certainly will be a headwind.
Good revenue growth across the globe. Record year.
Haven't seen a result like that since a decade.
Standing still.
Bloomberg Television and Radio. The fastest numbers and analysis.
Come on.
Welcome back. This is Markets Today. Almost 13 minutes into the European trading day this Wednesday, and the sentiment is slightly more positive. You know, a couple of factors coming through. The Italian government just clarified the
creates the
Couple of
next
central losses of yesterday. The deflationary picture out of China, not a major
around the
surprise,
Europe.
not doing much in terms of the equity action in China. We look ahead, of course, to CPI, the inflation print out of the US on Thursday. But again, a slightly more positive move across these markets. The Bloomberg Dollar Index that had been bid yesterday in that kind of safe haven tilt is softening in the session today, down around 0.2%. Let's get a recap then in terms of how these European equities are shaping up. There's the earnings picture, the earnings story that's filtered through as well, of course. Let's bring in Marcus Morris-Aiton, European Equity Portfolio Manager at Allianz Global Investors. Marcus, let's start top line then. European equities year to date, gains of about 8%. What is your view in terms of how much further European stocks have to rise?
Yeah, morning, Tom. It's a good question, and here we are towards the end of earnings season, which is always a pivotal moment to assess the corporate health of the company we're looking at. And so far, I think the message has really been that it's better than feared, but we should point out that expectations going into this results season have been relatively muted. On the positive side, instead, we're probably seeing less earnings downgrades than people expected, but there now are clear signs that the economy is beginning to roll over in places, and margins are beginning to crack around the edges. So that's certainly something we're watching.
Is the expectation then, given what you've seen out of its results, that margins, that rollover does start to happen as growth slows? Because that's something you're going to have to start positioning for in the months ahead, the quarters ahead.
Absolutely, and many companies have ridden the coattails of rising inflation in the recent year or two, and as inflation is beginning to roll over, particularly on the input cost side, that's something that many companies are having to pass over to their companies. So something we're really watching for is the pricing power of those companies, whether they can maintain prices and margins, or whether that has an immediate pass-through effect to their customers.
Destocking has been a theme as well, particularly consumer companies destocking. Is there an opportunity now, given the value squeeze of some of these companies?
Yeah, destocking is a theme that's come up in many corporate earnings results so far, and it's really been a perfect storm for many companies because supply chains were disrupted heavily during the COVID period, which led many companies to overorder at a time when consumer demand was cracking. So we've seen destocking problems in the pharma sector, in chemicals, ingredients, and of course in the logistics sector. The good news, though, if there is any, is we now appear to be towards the end of that in some of these sectors, and that's something that many companies have called out during earnings season. And actually that one sentence or two calling the end of that destocking cycle has really moved earnings results for those companies that have highlighted that theme.
What is your take on what's been happening in Italy? Do you see this as kind of idiosyncratic to a populist Italian government, that they're going to have to walk this back in terms of this surprise windfall tax on Italian banks? They're gaining in the session today, but not recouping all of the losses of yesterday. Or does it remind us that there was a political risk across sectors in Europe, and you have to weather that?
No, that's purely a European issue. It's something we might see in other regions as well. And there's no doubt companies, and particularly governments, have to navigate this balance between populist measures and long-term structural reforms. It's interesting to see the Italian government drawing back on some of those measures today as a consequence of the market reaction we saw yesterday, which probably surprised them slightly.
On the upside, you've got pretty decent exposure to Novo Nordisk. That story is really fascinating. They're challenging now over LVMH, the biggest market cap company listed in Europe on the back of course, this weight loss driving results out yesterday in terms of the potential benefits around those with any cardiovascular issues. Talk to us about how you're thinking about the healthcare sector. Is there further to run in this? What is the best way to get exposure to the momentum that's building around some of these weight loss drugs?
Yeah, I think yesterday was an enormous day for not only Novo Nordisk, as you saw in the share price move, but probably more importantly, the obesity treatment market longer term. And as you rightly said, yesterday we had the data from the SELECT trial, which Novo Nordisk has been running for 5 years now. And that proved that people who take Wegovy, which is their weight loss drug, have 20% reduction in cardiovascular events. And what that really does is it shifts the narrative away from these weight loss drugs being purely aesthetic, almost lifestyle type drugs, to something that can meaningfully transform the healthcare system. Because obesity is one of the biggest costs and connected to that risk. For healthcare
Small
pressure
pullback.
on many of these insurance payers to adopt coverage for Wegovy.
We have still green.
It's a market that's hugely undertreated at the moment. There's 750 million obese patients in the world globally, and yet the addressable market in dollar terms is only $2 billion. So I think many people's expectation is that addressable market might be north of 50 billion by the end of this decade.
Yeah, nice.
It is opening up. Novo Nordisk are very much at the forefront of that, and it's something we're continuing to be very excited about.
So potentially a 50 billion market, which, as you say, is huge. Do you want to continue to pay that via Novo Nordisk and Eli Lilly or some of the challenger companies?
Yeah, I think Novo Nordisk is the way to play it at the moment. They're the only one with a drug that is available to the market that has been through the various tests and trials. More will come, and as you rightly said, Eli Lilly are launching a drug likely next year. But this is a huge market. There's room for more than one player. So our view is that hopefully Novo Nordisk and Eli Lilly dominate that market, but no doubt you will see competition emerge. But really the theme here is growing and opening the market, which has huge positive benefits for patients, but more importantly, healthcare providers and the cost of that to the system.
China remains, on a different topic, dominant in terms of one of the market themes. It was interesting to hear from Masayoshi and the team at SoftBank yesterday, the CFO at least, there saying that they've started to de-risk in terms of, as they described it, in terms of their assets and their holdings of Chinese equities. How are you thinking about how much exposure you want to have to China? Do you want to have it via European equities? Are you concerned that, for example, luxuries and European autos are going to they're going to be further downside there? Luxuries was pretty very well. Is luxury peaking? How are you thinking about playing the China story?
Yeah, it's very different dynamics we're seeing in China at the moment. In Europe, all the conversations centre around inflationary pressures, whereas, as you discussed earlier, in China, it's very much deflation. How that is looking in terms of Chinese import and export demand is rather weak, but there are pockets of optimism. You mentioned luxury goods.
I think so.
In luxury, you're seeing the US slow down slightly, and you saw that in LVMH's results, but actually China's been much more resilient. So on a 2-year basis, China is up 45% now for LVMH's Chinese exposure. So it's something we're still optimistic about, and you have to look at the longer-term trends rather than some of these shorter-term cyclical factors which will float around slightly.
Okay, Marcus, thank you very much indeed with the call there on continuing to have exposure to luxury stocks on the back of a longer-term play around China. And Novo Nordisk is the call for Marcus in terms of how you want to be getting exposure to the optimism around some of those weight loss drugs. Marcus Horace, European Equity Portfolio Manager at Allianz Global Investors. Thank you. Sticking with healthcare then, Novo Nordisk, as we mentioned, shares taking a breather after yesterday's mammoth surge. We're going to bring you the story then behind the company as it closes in, as we mentioned, on LVMH as the most valuable stock in Europe. It's really fascinating. Stay with us for the details. This is Bloomberg.
So far the view up on the Frankfurt session is holding from the drop. Where can I call later?
What you doing?
On a session.
Okay.
Okay.
Trader Koltun,
Bye.
bye.
So you can see the ball stepping in.
This is markets today. We are 23 minutes into the European trading day. You're seeing gains of around 7 cents of 8% across the European benchmark, with energy, basic resources, technology, banks leading the gains. On the downside, top commercial and personal consumption, two sectors that remain in the red. Now, the weight loss drugs, Ozempic and Wegovy, have propelled Novo Nordisk to become Europe's second most valuable company. The insulin maker's shares are taking a breather after soaring yesterday, as Wegovy showed a 20% reduction in heart issues in a closely watched study. But the firm struggles to meet demand are raising questions. Can it hold on then to the momentum and live up to the hype? That is the question that has been explored by the team today in the Bloomberg Big Take. Let's bring in Bloomberg's Naomi Kresge, who covers European pharmaceuticals for us in Berlin. I mean, it is quite the tale, the propelling of Novo Nordisk to the second largest by market cap release company here in Europe. And the big challenge now has come in terms of the trial and the data coming back positive. How are you thinking about the implications for Novo on the back of this news?
Yeah, I mean, it really was a very interesting day yesterday for Novo, really a home run of trial results. And I think the question now is really, can they overcome some of these issues that they've had with production? Can they really keep up with demand for this medicine? Demand which is probably going to increase even more on the back of these trial results from yesterday.
What makes this company, Naomi, unique?
It's so Danish in so many ways. It's controlled by a foundation. This has given it a lot of stability. It has a 100-year history after bringing insulin to Denmark about a century ago. And it's a place that, hasn't had a lot of different CEOs. It hasn't had a lot of kind of corporate drama. They also have a very strong work-life balance at their headquarters. Employees will be gone for all of July on vacation. So it's a really unique place.
Yeah, I love that. I love that one. It's just so Danish. And yeah, as you said, we're now reporting then the fact that most employees may have missed all of the action, at least recent action, given that they're all on holiday or have been over the month of July. What are the potential downsides? What are the potential risks then?
I mean, this production issue, is something that investors, I think, will really be watching closely. The question of whether they can really capitalize on this first mover advantage that they have, being first to market with an approved weight loss drug that is this effective, that has also shown, the hard benefit that was shown yesterday. It's really a question of I suppose, execution at this point.
Okay, Naomi, really fascinating read, the Bloomberg Big Take. Naomi's Kresge, of course, Bloomberg's Naomi Kresge, on that Big Take and what it means for the future of Novo Nordisk on the back of the upside that they've seen. Really worth checking out, of course, NI, Big Take Go, on your Bloomberg terminal and on Bloomberg.com. Coming up, the Italian story around windfall taxes. We'll get the details and reaction. This is Bloomberg.
Nice. Are you taking the profits?
Antonina, here is your reminder
Alexa,
from
stop.
Łukasz.
This is Markets Today. We are 30 minutes into the European trading day. Here are your top stories. Banks reversed some of yesterday's steep losses as Italy says the impact from its surprise levy on lenders will be limited. European stocks and US futures climb, brushing off China's slide into deflation, while Treasury yields drop after a positive 3-year note auction. Plus, Novo Nordisk shares take a breather after yesterday's surge as it closes in on LVMH as the most valuable stock in Europe. Let's check in on these markets then on a day where there is a little bit more optimism across these markets and recouping some, not all, some of the losses in the banking sector of Italy on that clarification, let's put it that way, generously. If we're being generous to Italian politicians and the leaders over there, of course, in Rome, then the clarification around the surprise windfall tax. Of course, the benchmark then is indicated 0.9% here in Europe this Wednesday morning. The DAX is up 142 points in the UK. The FTSE 100's back above 7,500, 7,581, a gain there of 0.7%. And look at your sectors, with energy leading the gains, despite the concern about the deflationary impacts out of China, the fact that they're sucking in fewer imports, of course, on that weaker, sluggish domestic demand and those soggy imports. Energy has actually performed fairly well this morning, leading in terms of your sectors, up 1.5%. Technology also getting a bit of a bid, gaining 1.4%. Of course, banks coming back again on the back of the news that Italy has said that actually this tax windfall is going to be limited. We'll get more details on that story in the next couple of minutes, and the analysis as well from someone who is in the weeds on the banking sector. But that sector currently gaining 1.3%. Let's get a check then and the pulse on some of the individual stocks on the move with none other than Joe Easton. Joe, what is standing out to you at this point?
So TPI capped on now for around 13%, heading for its best gain in around 3 years. I'm feeling pretty pleased with myself. I'm picking this one pre-market for stocks to watch. That one, as I say, 13% gain. This is as their brokers reported an increase in the amount of revenue per head that they're making in the last quarter for the world's largest inter-dealer broker. I get the occasional stock correct pre-market. Now Flutter, this one dropping almost 5%. The UK, as I say, strong. The Brits still gambling a lot, but the Australians not gambling as much, according to the company. And that one's falling over in Dublin, the worst performing stock on the Dublin exchange. Doing pretty well in the US. They've got the FanDuel business, which is focused on American football, baseball, that kind of thing. But it really is that Australian outlet hitting that stock today. In terms of the grocers, we've got a whole delays. Now, this company has around 7,000 stores. 60% of their revenue is over in the US, but it's listed in Amsterdam. Some weakness in their margins, some of their costs still not coming down. That one falling 3%, despite pretty strong sales that are boosted by rising food prices, of course. In terms of autos, Volkswagen is one of the few auto stocks gaining today. Upgraded at Citi, who say that stock is too cheap to ignore. They've downgraded 4 car makers, including Stellantis, saying that consumers will start cutting back on the amount of money they're willing to spend per month on new vehicles. But they rate Volkswagen and also Renault buying, and both of those stocks gaining more than 1% today. Then we're going to look at Italian banks. Now, I'm not going to lie, your next guest is going to have to do the heavy lifting on the details for this one, but those stocks are rebounding. Fineco Bank, UniCredit, Intesa Sanpaolo, and BPM. That one, the former Banco Popolare, those ones all rebounding after gains, get my gains and losses mixed up. Huge losses yesterday, almost 10% for some of them. UniCredit was down around 8%. We've had that news overnight that this will be limited to around 0.1% of the assets of those companies in terms of how far this tax can go. So that's a bit of a relief, but it could still shave off their earnings. But we are seeing a rebound in Italian banks this morning, so that one moving the FTSE Mid Index higher this morning, Tom.
Yeah, recouping some of the losses of yesterday. Joe Easton, thank you very much indeed, of course, from our equities team. Let's stay on the Italian banking story then. The whipsawing for these stocks in the back of the policy moves out of Rome. Let's bring in Ottavio Lorenzi, co-founder and CEO of BMAS, who is always excellent on the banking sector. Ottavio, thank you for joining us. You described this move, this windfall tax, and it was a surprise yesterday, clearly, as a big mistake. Why? They've been making profits, and if you want to fill the fiscal coffers of Rome, this is one way to do it.
Absolutely, we need to raise taxes. It's an obvious place to go. It does seem a bit sort of capricious and unfair, and to do it just sort of the last minute without any sort of the last warning. It's also sort of a retroactive tax in that it's a new country tax to 2023, so get taxed on that. But I think it is a mistake which sort of sends a signal. If you as a firm do well in a particular quarter or year, we're going to come back and look at that and increase the taxes further beyond it. And it's a really peculiar tax in the sense that it targets just net interest income. I mean, what happens if your trading investment banking activity does particularly well in one quarter or 1 year? Are they going to come back and say we're going to take 14% extra of that or 50% extra from that? Should pharmaceutical companies be taxed for the extra profits they made during COVID? Should defense contractors be taxed extra for profits they're making during the Ukraine war? I mean, there's all sorts of scenarios that we think of, but it creates a level of uncertainty, I think, for the Italian banking sector, and I think for Italian equities markets more broadly. So I think it's a mistake on that front.
Are you in any way reassured by the clarifications come through from the Italian government around the fact that this will only apply to a limited 0.1% of assets held by these banks? Are you reassured at all this morning, Ottavio?
Well, certainly that means that tax is going to be lower than we originally thought. So yesterday we thought it was much bigger. But let's look at what that really means. So if we look at one of the big banks like Intesa, they're generating about 8 billion euros now in net interest income. They look on track to that. So 40% of that would have been an additional 3.2 billion euros of taxes for that firm. They have about $1 trillion in assets. So what do we think? It's about $1 billion. So they've reduced basically this potential tax from about 3 billion on Intesa down to 1 billion. So that's much better. That's much more reasonable. I am concerned by the Italian authorities coming out with such conflicting news in such rapid succession. I think they were a bit surprised by the reaction of the markets. They said, oh, no, can't do that. Well, let's clarify that and find some other way that we can limit it. Rather than take it down from 40%, we're going to take it down to 20%. No, we're going to do it by putting a cap based on assets. So they've got kind of a complicated formula in there. But what I do expect to see Italian banks do now is respond to this and basically start to hide interest income as fees and commissions on things. So they basically say to you, well, that mortgage you're paying 7% on now, we'll actually give it to you for 5%, but there's a 2% processing fee. So they're going to be playing sort of the three-card Monte shell games, trying to hide interest in as commissions or fee income and things like that. And that's going to take a lot of effort on their part. They're going to revamp some of their contracts and go back to when they go into loan origination to jigger things that way instead. So it's going to be a chasing game and hide and seek a bit in terms of those revenues. But I expect Italian banks to do that in the coming months and in the coming year, basically.
Does that suggest that the sell-off of yesterday was overdone then?
I thought it was actually quite restrained, given everything that was coming out. I mean, so they said a 40% tax on net interest income, which is bad. That's really bad, as I pointed out. That's a multi-billion euro hit for the big banks in terms of that. But I think there's uncertainty too in terms of what comes next. I mean, why stop there? Why not go further? You can only squeeze so much money out of the banks, and they start to suffer. So I think that's the uncertainty that I think is concerning as well. That you're not really sure what the authority is going to do. And this
Order filled.
In terms of position, I find that disconcerting as well. I don't find that reassuring really. I mean, obviously the tax is going to be lower now if they stick to this new number. So 40% capped at 0.1% of assets. It's a bizarre formula to put in place, and it's very disconcerting that they change so rapidly, so easily. I'm not sure what's going to happen.
The argument that the flip-flopping then from Rome is just kind of underscoring the uncertainty. When it comes, interestingly, of course, we saw Spanish banks as well falling in the back of this news yesterday. We have a viewer question, Ottavio, asking whether it is your expectation that other policymakers in Europe, other governments, may be considering a similar windfall tax?
I'm sure politicians all over Europe are considering additional taxes in all sorts of places, and the banking sector is not the space to come with it. I think now, given the Italian experience and the impact on the stock market that they had, they're going to be much more cautious about doing this and coming into it. And I think they're going to try and announce it beforehand and not suddenly come up with a new tax that's quite substantial for the banking sector. So I think they'll be more cautious, but it's going to be a very strong temptation to follow suit, though. Politicians in Europe tend to sort of follow the leader. Once one of them does something first, the others tend to follow. So I would expect, yes, we'll see similar things coming out of other European countries. Spain is a prime candidate. The government there is running serious deficits. They're going to need additional cash, and the banks are sort of the golden goose that is going to lay those eggs for them. But no, so I think we will see other European countries do that. I think they're going to be more cautious now, given the Italian experience, and seeing that the Italian government was forced in sort of a very humiliating, embarrassing way to sort of back down from it quite substantially.
Octavio, over in the US then, we had this downgrade from the lenders by Moody's. Was this kind of backward-looking action from this rating agency, or are they flagging risks that the markets continue to overlook?
Well, I suppose better late than never. You know, we saw all these things unfold in the regional banking sector in the US in March. The ratings agencies were relatively silent at that stage in terms of it. They certainly gave us some advance warning about happening. But I think the balance sheet stress there, on the one hand, has not gone.
Order filled.
The banking net interest income in due course in the US. It hasn't yet, but I think that will happen over the course of the next couple of quarters, so we'll see that. There's definitely going to be pressure there. The other question is what happens to the real estate portfolios, in particular the commercial real estate portfolios at these regional banks where they have very large exposures. So far, those things have held up pretty well, surprisingly well. Actually, default rates on commercial real estate remains quite low. The valuations have come down, but they're not defaulting on the loans just yet. The thing that has changed quite substantially since March is the Fed has stepped in and basically put into a term funding facility that is very, very generous to these regional banks and allows them basically almost unlimited access to liquidity by basically saying we'll lend you money against the original value of your securities, of the things you hold in your portfolio. So I think that basically takes a major part of the risk off the table. So I think Moody's reaction here is basically almost sort of a day late and a dollar short in terms of warning us. It would have been good if they told us before all these banks went belly up that there was a problem rather than a few months later.
Okay, I like
the other thing I find
50 analysis, a day late and a dollar short. Sorry, I cut you off, Octavio. What else do you find interesting?
Well, the other thing that's really interesting about it is they put certain banks on sort of a watch list and say we might have downgrades for these banks in the coming months. In particular, sort of the three big custody banks, Boney Mellon, State Street and Northern Trust. Now, if you look at the financials of those firms, except for Northern Trust, they're growing, they've got healthy profit margins, they seem to find. Moody's seeing something there that we're not seeing. So I'm curious, I'd be curious to see what their reasoning is to put basically State Street, Northern Trust and Boney Mellon on the watch list. Well, those firms tend to have pretty boring sort of securities processing businesses where they don't take large exposures, they don't take large bets on lending. Lending is sort of a smaller part of their business overall than other banks. So I'm a bit confused by that. I don't see a strong rationale reasoning for the watch list warning there.
Okay, Octavio Morenzi, really appreciate getting your analysis and your take on what's happening, of course, Italian lenders and the banking sector in the US, co-founder and CEO of Optimas. Thank you. Coming up, Continental cuts its sales outlook for the year on weakening markets for tyres in Europe and North America. We're going to be speaking to the CFO, Katia Gervais. That is next. This is good.
That's it for today. Okay, so RTY, the new high, and what we doing with NQ.
Welcome back, this is Markets Today. We are 45 minutes into the European trading day. A little bit of optimism in these European markets in terms of catching up with some of the selling of yesterday, making up for some of the losses at least. 0.9% is the gain across the European benchmark. The stock 600 energy is the sector that's leading right now, up 1.6%. Just one sector in the red, that is travel and leisure. Let's get back to some of the macro though, and so far, so good. That is essentially the basic assessment for this week's historic Treasury debt auctions. Tuesday's $42 billion sale of 3-year notes produced a lower than expected yield, so good signs, of course, for the Treasury, and a sign that demand was actually stronger than anticipated. Today is another big day. Let's bring in Bloomberg's Valerie Titel then. Valerie, last week's Treasury weakness has seen a decent reversal since Friday's payrolls. The auctions are key, though, and particularly with the benchmark, with the 10-year later today.
Yeah, that's right. The 3-year auction was really quite stellar last night. But I think the real test really comes from this long-end paper we get. We get the 10-year tonight and the 30-year auction later on Thursday. More attention is on the long end, Tom, because it really led the weakness in the Treasury market last week on the back of this Fitch downgrade of the U.S. Treasury market and the U.S. Treasury just announcing these larger auction sizes and announcing they're going to be issuing $1 trillion of debt just in the third quarter alone. So a lot of attention on the growing U.S. debt pile, and let's see if this 10-year auction tonight, even though it's bigger than what we thought it was going to be, if it gets off on a solid footing.
Okay, so we're talking about government debt, of course, Treasury debt, their ability to refinance and load up in terms of the ability to continue to finance the spending plans of the government. Meanwhile, and the consumer in the US has remained relatively robust. Some of that is clearly falling on credit cards. What is happening in terms of the credit card debt of US consumers? Is that also something of a concern?
It's definitely rising. We had a quarterly survey out from the New York Fed yesterday that showed credit card debt in the U.S. reached over $1 trillion. It set a new record. It's the first time it's been over $1 trillion. And then
it's never been above $1 trillion.
Never been above $1 trillion. For the first time it crossed that threshold. And then for U.S. households as well, total debt of U.S. households also reached a record. Now it's $17 trillion. So those numbers might sound eye-watering, but the good news in this survey was that delinquency rates are still quite low. They dropped to really tight levels during the pandemic because of all the stimulus payments these consumers had, all the cash the consumers had on hand. They have been normalizing somewhat, but we're not seeing a worrying rise in delinquency rates just yet. But the worrying thing is, the bigger the debt pile is, the more trouble we do get into if delinquency rates start to creep up.
Okay, so record borrowing on those credit cards in the US. What I tell, of course, I'm looking ahead to that auction of US 10-year US Treasuries later today, the importance in terms of whether or not there is still that demand. Thank you, Valerie. Now, coming up so far, so good. As we mentioned, we do have that Treasury auction. That's coming up later, of course. Valerie will just tee that up for us. It is, of course, consequential in terms of the US Treasury's ability to continue to finance some of the spending plans and whether or not there is
Try to stay on the bullish side in the price of before. And I am contrarian again, as always. Break even now, my stop loss when I open the trade was quite small.
Of that German auto parts supplier. Stay with us. This is Bloomberg. Continental has cut its sales outlook for the year on weakening demand for tyres in Europe and North America. Pleased to say I'm now joined by Continental's CFO, Katja Durfeld. Katja, good morning. Let's start with that weakness then that is percolating through the European and US markets for the tyre division of the business. Do you expect that weakness to continue in the quarters ahead?
Yeah, so Mark, we've already seen weakening demands in the tires business during the course of the later last year. So the second half of the year, demands were already lower than in the first half of last year. And we do see this weakness to continue throughout this year. And this is the reason why I've reduced our tires replacement business outlook by around 500 million in sales. Nevertheless, let me confirm at this point in time that we do stick to our margin forecast. So despite the fact that we've lowered the expectations on the tires business and replacement, we still stick to the margin forecast, which shows how well we are positioned with regards to our pricing in the market at the moment.
Okay, so you stick to that forecast around margins. In terms of the inflation and the input costs, transport logistics clearly has been a challenge, Katja. Is that still the pinch point, the choke point for you? Is it transport, and when do you see those issues being resolved?
When you look over our cost inflationary guidance for this year, we've lowered our expectations on cost inflationary headwinds from originally 1.7 billion to 1.4 billion. We still stick with the 1 billion that we've originally laid out for the automotive business, because there the majority is coming still from material input costs, especially from the semiconductor and electronic component business. When you look at the tires inflationary headwinds guidance, we've lowered expectations from originally 400 million to 200 million. Those 200 million on the tire business are solely related more or less to wages and salary increases, inflations that we do see during the course of this year to happen. And when you look at the ContiTech business, we've also lowered our expectations there by 100 million. And this is mostly due to the fact that we do see less impact, especially from the logistics that you've just announced on our cost basis in the business. So overall reduction from 1.7 billion to 1.4.
Katja, how much demand are you seeing out of China? I'm thinking particularly of the auto units for Conti. What percentage of sales is coming out of China, and how much demand do you expect to see out of that economy in the quarters ahead?
So when you look at our overall exposure, we published figures last year where we said that in total 12% of our sales are in the Chinese market. In fact, when you look at the outperformance that we had in our different markets, especially on the automotive side, you've seen that we have done quite well in the Chinese market. In the first quarter, we grew significantly above market growth in the first quarter, and in the second quarter, we grew in line with the market. So overall, China is a relevant market for us in Continental, and we're happy to see us growing with all our customer base there, not only with international OEMs, but also especially with the Chinese OEMs.
And staying on the China story, Chinese EV makers are expected to kind of double their market share potentially in the next 3 years. How do you expect that theme to impact your business, to impact Continental and the demand for some of those units, some of those products focused on EVs?
Okay, let me first point out something that is of great relevance for us in Continental, is that our current product portfolio is not that much different from the powertrain, also our future product portfolio, by the way. With the spin-off of Vitesco Technologies, we got pretty much independent in our product portfolio from the way the car is driven. So if it's an electric or a combustion engine, it does not matter that much to us anymore. All cars need tires, all cars need brakes. The differences that we've developed for the market, all the autonomous driving solutions, all those are relevant for no matter what powertrain drives the car, in fact. So overall, with the new cars and with the new vehicles and with our strong position that we've built up in China, we do expect us to grow with the market or outperform the market even with the products that we bring.
Okay, further growth potentially out of China. Continental CFO Katja Durfeld on the back of those earnings. Thank you. We appreciate your time this morning. The stock up 0.9% so far in the session. You're looking at optimism across European equities, gains of 0.8%. That is it for markets today. You can get more insights, of course, on the website. Stay with us. This is Bloomberg.
Hi, Colton. How are you doing? Hi, Colton. Can you hear me?
Leaders in market movements. This is the Pulse with Francine Lockwood.
Well, good morning, everyone. Welcome to the Pulse. I'm Sophie Lacquer.
Okay, it looks like we don't have too much movement. I will be
Italian banks claw back some of yesterday's losses as the
closing
government says the
shortly.
impact from its surprise tax will be limited. China slides into deflation as a property slump plunging export demand and subdued consumer spending weigh on the recovery. Plus, Amazon set to begin talks about becoming an anchor investor in the IPO of UK-based chip designer Arm. So good morning, everyone. Still full pack show despite being a little bit thin on news for August, but we'll look at labor this, we look at present treasuries, we look at CPI later tomorrow in the U.S. So this is a feature across the board for some of the markets. You can see the FTSE gaining some 0.7%, the CAC 40 gained 1.3%, the FTSE made in Milan. It's interesting because it's gaining 1.7%. So we'll have a full roundup on what's happening with the Italian banks. The finance minister really yesterday walked it out with the statements, so trying to put a little bit more meat on the bones about what this tax in terms of profits this year for the banks really meant. Yesterday they freaked out bank stockholders. Today they're appeased somewhat. A lot of banks are gaining some 0.3%. If you look at 10-year Treasury yield, now this is a big one because we heard from Patrick Harper also that central bank, the central bank, the Fed could actually stop raising rates but then keep them at this level for a lot longer. So we see the actual resilience of some of this tenure also after we had a bond auction yesterday that was oversubscribed. You can see we're holding
Hey
up
guys,
above
as
3%.
a
So
quite
let's
boring
start talking
morning,
about the
I will
environment.
be closing.
We're
I've got
doing overall still gaining about
still
3% yesterday.
4
Long-term
contracts
markets strong.
left with the 3
Key data points
positions
you can see Intesa Sanpaolo and
as I
UniCredit
open 10 of
down
them,
between
so we
8 and
will
10%
see
yesterday are now gaining
where this
3
will take
and
me.
2%.
I
So
am
Italy
break
has
even
issued
now.
this clarification on its surprise bank profit windfall tax after lenders
Okay,
had some $10
see
billion
you tomorrow.